right, traders ended up having a massive green day within Trader Society. The best option play of the day, I had 5 option trades. Every single one was a win. Nice quick scalps. The best one was playing put options right before the FOMC meeting. I ended up making a 50% return on those puts in basically one single minute. Once 2 p.m. struck, SPY dropped 4 points in a single minute. And the portfolio is up 11.37% on the day for the large account. Big shout out to one of the most consistent members within Trader Society right now, Ricky Garcia. His portfolio is up 11.54%. He also brought awareness and brought attention to this brilliant trade idea on Meta stock. We're going to be recapping the trades within this video and going over the updated price action analysis. But he basically was buying the dip on Meta earlier into the day, and he ended up making a 42% return on those calls. I ended up seeing what he was seeing, and he brought it to my attention. I did the same, got in a little bit later, but still managed to make a 15% return. I'm going to be recapping the trades. I'm going to be explaining to you on why it is that I decided to buy puts right before the FOMC meeting and hold through that. As you can see right here in terms of Trader Society within the private chat room, I ended up alerting puts right here at 1:50 p.m. and I went with the 386 strike, and those made a 50% return very, very quickly. And not only did I buy and alert puts there, as it had that small micro spike at 2 p.m. right before it dropped 4 points in a minute, had a quick little spike, I was adding into puts confidently. For those of you who've been studying the initial reaction of the FOMC, it typically does the inverse. So if it spikes initially, it usually does the inverse and starts to drop. Usually the initial reaction is the wrong direction. So that's another reason why I decided to add in puts and even got more confident as it had this small little micro spike right here. And another thing that you should be aware of and notice with these meetings is I see it happen all the time when SPY already gaps up and it's moving very, very slow towards resistance the entire day. And then the meeting drops and it crashes and then it fills the gap. And then once the gap starts to fill, it has a reversal. In this case, the reversal didn't occur until the key support level that we spoke about yesterday at the 380 potential dip buying opportunity instead of the 384 gap fill reversal level. So want to bring awareness to all that, right? So let's go over and we're going to be doing the updated price action analysis. As you can see, the market is getting destroyed here in, extended hours and future hours trading session. It is getting obliterated. SPY is literally at $374.61. It's an absolute bloodbath. And let's kind of recap the day, recap some trades, and go over the updated price action analysis. So why puts? What was the reasoning behind the puts? I'm not going to be talking news information fundamental wise on like why everyone was so bearish. The overall thesis was bearish into this meeting, with the interest and all that stuff, with interest rates and all that stuff, hikes. I'm not going to be going over that. What I do is I focus on reactions and I focus on price action. So here's what made sense to me, and here's why I decided to choose puts. Within my watch list that I sent out within Trader Society, as you can see right here, I had stated there's 2 gaps to fill. This was at 1:46 p.m. SPY has 2 gaps to fill above. If it reacts bearish, I'll look to buy puts at the gaps. And the first gap was at $388.54. The second one was at $390.10. Basically anticipating a gap close reversal where SPY gets crushed, then it starts to drop back down to fill the gap below at 384 if we see the bearish reaction, right? So I learned that at 1:46 p.m. 4 minutes later, I decided to buy puts. So from a technical view, these are the reasons why. And then I'm going to kind of go over more of like an informational sense of view, but not going to be covering all of that. So from a technical view, looking at this chart, SPY gapped up. SPY gapped up today. The entire day, it was topping at key resistance. So if we look at the 5-day chart right here, you can see you have a lot of resistance for the past 3 days now at this 386, 387 level, a lot of resistance, not too much upside potential. You could see right here that gap at 390 ended up filling in extended hours. And when it filled this gap right here, it had a double top and had a reversal and sold off hard. And you can see the same exact thing happened today. History repeated itself. It filled the lower gap at 388.55. It partially filled it right here. I played the partial gap close reversal, and then it sold off. And then it rocketed back up. It filled the gap right here. And then it had the bearish, reactions right here, bearish trend reversal candlestick, lower highs, all bearish confirmations. And then it had another gap close reversal, right? So the reasonings behind this was it's been having gap close reversals. There was a gap to fill right here. Let me disable extended hours just to visually show you what this looks like, right? So there's a gap to fill right here at $390.12. During extended hours, it had a double top. You can't see right now because extended hours are disabled, so you can clearly see the gaps. It had a double top, like I explained to you, at 390, and then it sold off very hard. So I'm looking at this and I'm saying, okay, what is SPY doing? It's gapping up. It's moving very, very slow. It's at resistance. It's extremely choppy. It's forming lower highs. It's topping out at key resistance. So I'm thinking to myself, what would make sense here? Based off the history and the overall thesis was bearish for this FOMC meeting, right? So everyone's bearish. It's at resistance. It gapped up. It's high. It's inflated on thin air. It's not moving up. It's just chopping, moving very, very slow, sitting at the highs, which is something I would say is bearish. And recently, it's been getting destroyed at this level. It recently had a gap close reversal. And another reason behind this was I was looking at the options. I was looking at the option chain, and I've never seen calls so high. I was looking at the prices of calls on the same day expirations. They were so high. And I was like, would it make sense for the calls to print? SPY's at resistance. It already gapped up. The calls are so high. Would it make sense for the call options to print? And I was thinking about this logically, and I was saying, no, it would make no sense for these call options to be printing at these levels. The prints wouldn't be that great. So I went with the puts. Puts were overall cheaper. It was overbought. It was at key resistance. The overall thesis was bearish. It recently had a gap close reversal. And, in terms of how it's been reacting at that gap close reversal, this is key support. Your key support is at 388 to 390. SPY sold off, cracked that level. It rocketed back up during extended hours, hit 390, turned previous support into resistance, and it's been forming lower highs ever since. It's been forming lower highs. It's been trying to top out of the gaps. As you can see, it's been having partial gap close reversals. It's been having gap close reversals literally all week. There was a gap to fill here. It filled the gap, had a nice reversal. There was a gap to fill right here. It partially filled the gap, had a reversal. During extended hours, it actually filled this gap, had a reversal. And then today did the same thing. It had a partial gap close reversal before right into FOMC meeting, sold off, and then it rocketed back up. And look at this, another great opportunity for put options. It filled the gap, formed a bearish trend reversal candlestick confirmation, formed lower highs, and then it dropped and sold right back off. Two opportunities for puts, right? So that was the overall thesis, and that was the overall reasoning why I decided to play puts. That was the main trade. And that's the main lesson that I'm going to be going over. Another trade that I have was put options right here. I was looking at, this is another thing that I like to bring awareness to. Write this down, initial reactions. Initial reactions at key levels are very, very important. So for example, this is an initial reaction. SPY is at 387, and within just a couple minutes, it drops all the way to 380. So the initial reaction should be, with such an overreaction and crash, a lot of people who held calls just got screwed. So there should be a quick micro pump. There should be at the best support level possible. And using the 5-day chart, and like I told you in yesterday's video, the best support level possible was at that 380.50 right here, that 380.50 that I went over, 380.50 to 381.50, and that's where it bounced, right? Initially, the key word is initially. So when you see overreactions, you can potentially see a reversal with confirmation for the initial reaction. That is key for reversals, the initial reaction. And then here's another example. This is another overreaction. SPY just bottomed at 380 and it's rocketing back up. So what would be some good levels to play some puts as it's rocketing back up? I'll tell you, the previous support level. And I did this and I made a 30% return. The previous support was right here. Looking at the 5-minute, all of your support is right here at $385.40. If SPY is going to have a bloodbath and crack through this and have an overreaction and then initially spike right back up, there should be a small micro reversal, a small pullback at the previous support level because it just had a very bearish move. And I ended up playing put options. I played those put options. I made a 30% return. I bought the puts right here because there was a bearish confirmation at previous support, which is going to react as a resistance. I bought them as soon as this bearish candlestick formed, literally towards the top. And then I made a quick 30% return and I literally got out at the lows. How did I know to sell here? Well, first of all, I'm not looking to hold these very long. I'm getting in and out. If I'm up 30%, I'm taking it. In terms of another reason, how did I know to sell right here? Well, previous resistance is right here. Big downside potential. If the SPY turns that into a support level and it bottoms like it's doing right here with a bullish trend reversal candlestick, like it's consolidating right here and starting to break out, Then previous resistance turns into support, which is bullish, and then it's going to start rocketing. And where's it going to rocket to? It's going to start rocketing to fill that gap at $388.55, which would be the next opportunity for put options, right? And then when you see those bearish confirmations, then you play the puts. I will say this type of price action is my favorite type of price action in terms of getting hurt with this price action. In my experience, the main way to get burnt trading this type of price action is by taking the risk of getting in right before the meeting, which is what I did end up doing, and it was my best trade. But I took a respectable position size. I put in about 8-9% of my account, and that doesn't mean I'm risking 8 to 9% of my account, and I ended up making a 50% return in 1 single minute pretty much. I held it for about 15 minutes, but as soon as it dropped within 1 minute, it was like a 50% return as SPY dropped 4 points in a single minute, right? And then from there, like I said, I had the scalp right here for the puts 30% return. That took my portfolio from being up 6% on the day to 9%. It started up 1.5% when I scalped the made a call options. I bought made a call options right here when it had this small little break above resistance, and then it reacted as a support level, and then it had this crazy move to the upside, and SPY was actually selling off during this time, which is pretty crazy, and I sold into that spike. Big shout out to Ricky for alerting that one. But yeah, these are things that I want to bring awareness to. In terms of playing it safe, I wouldn't recommend holding through. I don't hold through every meeting, and it's something I rarely do. And when I do it, I make sure that my position size is small and respectable. I'll let the volatility do the work for me. I don't need a big position size. I have compound interest. I'm compounding my account. I have decent percentage gainers that are going to make up for the lack of money for the lack of size that I'm putting into these contracts. So yeah. And it can be hit or miss. It really can be. I mean, the max risk would have been towards the gap fill zone. But yeah, that's my overall thoughts. That's my overall analysis on that. And then, like I said, in terms of trading opportunities, looking back at this and going over price action, what were the main trades for today that you could have utilized with this strategy? The puts before the FOMC, which is something I took advantage of. The dip buying opportunity at that 380.50 level. Remember, initial reaction. So initially, do it. If it retests for a double bottom, like right here, you don't want to do that again. Do it on the initial reaction. This is going to create a lot of fear. And when calls get screwed like this and it has that wrap itself and it's that key support, we will likely see a bounce back. And that could be a very, very high bounce because SPY can like to retrace back to the previous support, which was all the way at 385.60, right? So dip buying opportunity at that 380.50 level. And then in terms of your second opportunity for puts, it was right here at the $388.50 gap close reversal level, right? And the confirmations are very, very simple, guys. Use the candlesticks, use the 1 minute candlesticks, use the 5 minute candlesticks, use the 30-minute candlesticks. Very simple confirmations, very, very simple confirmations. I use the 1 minute, the 5 minute, and the 30-minute. Those are my main key time frames, right? You could see even the previous closing price, this could have been another scalp. It reacted as a resistance here, nice sell-off, reacted as a resistance level right here, nice sell-off. When previous closing price reacts to support like it did right here, nice breakout. Those are all scalping opportunities. And then the gap close reversal, this was one of the best ones. And you can see right here, trend reversal candlesticks. It fills the gap. And the keywords with all this is overreactions. I'm telling you, this is where the money is to be made. And I find my easiest trades at key levels with overreactions and initial reactions. Combine those two together, right? So this is the initial reaction. The initial reaction was bloodbath, hits 381, initial reaction, bullish dip buy. Now, what is not an initial reaction? Right here. This is not an initial reaction. Right around here, this isn't an initial reaction. It already had the nice pump. It already touched it first. This is more of like your third or fourth reaction, right? So focus on initial reactions. Those are the best ones, right? Because we're going to see some sort of spike on those opportunities. But yeah, I did end up playing calls too. I actually played calls right here, made a quick 7%. I literally bought the lows of that dip, made a quick 7%. And then I played calls again and made like a quick 6%. But this was a phenomenal day, guys. 11.37% return on the portfolio. I want to give a big shout out to the members within Trader Society. Absolutely crushed it. Large accounts up 11.37%. Ricky Garcia, he ended up outperforming me today. Big shout out to him. His portfolio is going parabolic, man. 11.54% return on his portfolio, man. He absolutely crushed it. This play on Meta, that was a sick call out. That was sick. He ended up making 42% return on that. And just big shout out in general to all the members within Trader Society, man, who are absolutely crushing it. And let's continue to crush it. 24% return. Very nice. Very nicely job, Lee. So things I want to bring awareness to as well. These returns are truly insane, right? It is absolutely insane to make a 10% return in a single day. So one thing I want to bring awareness to, and then we're going to be going over the SPY into this video, but I want to bring awareness to this, right? It is very, very important to understand what it is that you are optimizing for. What are you optimizing for, right? I'm going to show you what it is that I mean that in my approach when it comes to trading options, right? So in terms of what I do, I scalp, I get in, I get out very, very quickly. I do not hold, and I'm optimizing for a strategy where I cannot have a big loss, or it's basically impossible. Even if I break my rules, obviously if you break your rules to a crazy extent, you can have a big loss. But for the most part, I'm optimizing a safe, conservative options trading strategy where you can grow the account rapidly within time. It's not going to happen right away, but within 1 year, it can be life-changing. I just want to show you an example, right? Let's say, I don't know, $20,000. Let's say your account was at $20,000. And on average, if you can make a 2% return daily, which is insane, and you're compounding the account, but with options, it's realistic to do this. And I'm going to explain to you on how I do it in a safe way where I'm not risking a lot, right? So let's say you made a 2% return on average, and you compounded it for 1 year straight. And you were very consistent with your results, right? Obviously, it's not going to look like this. There's going to be some setbacks. There's going to be some red days. But let's exclude weekends here. And you could just visually see. It would be 3.5 million. And this is the power of compound interest. As you can see, you would start off making like, $3,000 a month. And then as time goes by, it scales like crazy. It's not until the very end where it gets life-changing. I mean, we're talking 6 figures by March if you were consistent with this, right? And then if you have a red day, then you're going to have a drawback. It's just going to take more time. But if you can just consistently compound your account over time, within years, it's going to lead to life-changing results. So what is my approach to compounding my account? To trade options in a very, very safe way. So with my strategy, I like to time it perfectly. I like to scalp. I get in and out. I don't hold for a very long period of time. So I'm not aiming for massive wins, percentage wise or dollar wise, right? Here and there, I have some nice percentage wins where it's like 30, 40, 50%. And then other trades, it's like a quick 5 to 10%. It depends on the setup. It depends on the strategy. It depends on what it is that I'm looking at. It depends on the scalp and trading opportunity. But I don't need to aim big. I don't need to hit big percentage wise. I don't need to hit big dollar wise. What I do is I find a balance, and I'm optimizing to never have a big red day, and of course to just not have red days in general. And I'm scalping. I'm getting in and out in terms of, well, what contracts do you go with, right? Well, I'm staying at the money. I'm basically going with the closest strike price to at the money, and then, well, what expiration you are going with. I'm finding a good balance with a 1-day expiration. So the expirations that don't expire today, but the ones that expire the next day. Sometimes I will do same-day expirations. You just have to understand that with the same day expiration, you cannot hold for a long period of time, and you can have a big percentage loss. Now, if you have a big percentage loss on a contract, it does not mean that it's going to be a big percentage loss dollar-wise if you're not sizing big on it. But like I said, in general, you don't want big percentage losses or big dollar losses. You don't want both, right? So it's just about finding that balance, right? And I'm staying at the money. I'm not going far out of the money. And what it is that I'm doing is, like I said, I'm literally scalping SPY. I'm using the gap close reversal strategy. I'm using the gap fill strategy. And then I'm using just a, very simple support resistance, price action analysis, candlestick type of strategy at key levels with overreactions. So it's a couple different things. And my approach is, right? So with this, it's like a couple trades a day. As of now, it's a couple trades a day. So there's like 2 different strategies. I would say the first strategy is the best setups at the best prices, using the gap close reversal strategy at the best price. That's the best strategy. That's where I put in more size. I have more conviction. I have more confidence. I try to hold it just a little bit longer. And that's the best setup, right? Now, I have another strategy where I scalp using overreactions with trend reversals and also following the trend at key or make it or break it levels with initial reactions. That is another strategy. Now, that is not the best strategy, but it is working, and I'm doing very, very well with it. And a way to develop a very strong edge with that type of strategy is risk management and position sizing, right? So my daily goal is 2%. That's my daily goal. If I'm looking to make a 2% return daily, let's say I make one trade, I make a 1% return. On my next trade, I'll risk like 0.50%. So I don't give back the entire profit. I always want to make sure that I don't go green to red. My main rules would be I don't want to go green to red on the day, right? So whatever I make on my first trade, I'm going to look to risk a little bit less. So that trade matters. I will say though, in terms of the best setups at the best prices, those are something that I do go a little bit heavier on, and I do just hold for a tad bit longer, just because the entry and the rarity of the setup. But like I said, I'm against holding. I don't hold too long. Like for me, holding probably like if I were to hold for a long period of time, it would be like probably 15 to 30 minutes. That's what I consider a long period of time in terms of holding these options. And then I cut my losses extremely quickly. But like I said, it's really sharpening your edge. And the way I'm finding edge is through that risk management, position sizing, not risking a lot. And on an average trade, I can make a quick 1%, 2%, 3% return on the account, not risking a lot. And then what I do from there is, and this is something I'm developing and working on, if I hit my daily goal, I don't want to keep trying to make big returns unless I'm like extremely confident in the day. And I've noticed I do best on these days. The only time I could really do poorly on a day like this is if I hold through the meeting and then I just get caught in something like this. Like if I had calls here, that's the only day I could do bad in that situation. But then I can make up for it with my price action. But I do best on the volatile days. I really do best on the volatile days when these meetings, when these speeches occur. That's when I do best. But yeah, like I was saying, in terms of these options, man, it's really one thing that I'm noticing is, right, so it's like, how can you do extremely well? So trade the best setups at the best prices, and then when you have a large account, you're more experienced and you're more professional. If you want, you can add on this more type of a scalping strategy where you make a couple trades a day, and sometimes it's even 5 trades a day or 10 trades a day, right? So how could you do very, very well? By stacking on more trades. If I'm up 2 to 3% on the day and I'm seeing some nice scalping opportunities, I'll risk like 0.25% or 0.50% to make a 0.5 to a 1% or sometimes triple that. That's what I'll do, because I'm telling you, man, all these tiny percentages bring the craziest difference. Let me just show you how big of a difference this truly is. Say you make a 2% return on a $20,000 account. That's 3.5 million in 261 days, right? So 1 year of consistently trading doing that. Now, if I bump this to 2.5% a day, just an extra 0.5%, say you were to figure out an extra way to make a 0.5% on the day, adding on some type of strategy. You can see right here, now it's at 12.5 million instead of 3.5 million. So what I need you to understand about options, every tiny thing you do makes the biggest difference. It truly does. And you have to understand what is that you're optimizing for. So what I'm optimizing for is a strategy where I'm not holding very long. I'm getting in, I'm getting out very, very quickly. I can adapt, I can change my mind, I can cut losses extremely quickly. And I could trade the best setups at the best prices. I can also size in light on a setup that's not as good, but will likely work, right? So there's like 2 types of strategies. And on those trades, I go smaller, right? So I build it from there. So, if I'm at 2% on the day and then I see like 10 more scalping opportunities, and let's say every single one of those is a win, that would be an extra probably 5% return on the portfolio, probably a 0.5% return per trade on those, an extra 5% return on the portfolio doing that, not risking a lot. So I'm always going to make sure that I don't give back my profits. And I'm always going to make sure that I don't have big red days. I've studied how my losses are created. They are created due to a couple of reasons. Big position sizes. That is one of the number one reasons. Massive position sizes, continuing to add into a loss, holding for a long period of time. Those are the main reasons why. Also, in terms of timing, I've noticed my biggest losses come from the morning. If you get caught up in the wrong direction with a decent position size, you hold it, you add it, say it's something like this, right? That's going to stuff like this is going to happen in the morning, or it's going to happen during the meeting. Now, I love this type of price action. Just know it can be extremely risky if you are getting in before. I prefer to get in after. So I prefer for the initial move to happen, then I like to get in for a reversal or to jump in on the trend. This would be following the trend where this gap close reversal level reacts as a resistance, follow the downtrend, play puts, and then look for the calls overreaction on the dip, right? So that's what preferably I would do. But that's what I've noticed, man. Just by like I said, I'm not looking to trade at market open anymore. I'm truly not. I'm in a place I don't have to do it. I've been studying where my big losses come from, and they come from in the morning, and that is due to high volatility and lack of direction. It is extremely risky to be in a situation where something's extremely volatile and there's lack of direction, or you're holding through some sort of earnings event or something like that, right? Because anything can occur. Anything can occur. I could have been on the wrong side of this trade. It could have been a big loss. But if you know that going into the trade, then you need to understand that, okay, I have to take a small position size. I have to put myself in, what is the worst possible case scenario if this moves against me, right? What is the most I'm willing to risk and quickly exit and get stopped out, right? If you're going to do that. That's something that I don't do very often, but this was one of those rare situations where I wanted to do it. And like I said, I didn't take a massive risk. It wasn't a massive risk because I sized in accordingly and chose the right contracts. But yeah, just by eliminating trade in the morning, the biggest disadvantage to trading in the morning, in my opinion, is high volatility with lack of direction. Lack of direction, high volatility, anything can happen, lots of flip-flops, kind of like Russian roulette. I do believe there's some trades and some opportunities where the strategy work very, very well in the morning, but I would just try to avoid getting caught up in a big loss. You'd really have to be able to, differentiate. You really have to be able to tell the difference, and you have to be super sharp, right? If there's a thing you're not supposed to be doing or a time you're not supposed to be trading at, but you see the opportunity, and you go for it, then fine. But just make sure and understand that you are training yourself to eventually mess up that trade. You are training yourself to consistently trade at a specific time. Just make sure you're training yourself to specifically trade the best setup at the best price in that situation. Because, if you're trading during a certain period of time where there's lack of direction, high volatility, there might be a time where you make the mistake and don't trade the best setup at the best price, or you're not in a good trade, and then you get caught up in a big loss because it's just not a great time to be trading, in my opinion. So just skipping direct market open, focus more towards 10 a.m., 10:30 a.m. Sometimes I'm still going to trade towards open, but not directly at open. So when I say sometimes towards open, I'm talking like 9:45 a.m., like give it at least some time. And it depends on the setup, depends on the rarity of the setup. But I'm telling you, I am finding it to be the most easy as of now. This is the most easiest way to trade the SPY is to just wait for the chart to develop, wait for the price action to develop, get a feel for how the day looks, get a feel for the range, let the big moves develop, get a feel for the trend, the chart, the range. Is it a chop day? Is it a trend day? Get a feel for the trend instead of just jumping in. I'm telling you, one of the worst things that I've done as a trader was jumping in. I would get really excited at the market open. I'd be really fired up to make a trade, and I would just jump in. I would jump in very, very quickly. And I'm telling you, that's a big way to get caught up in a quick loss if you hold that position for 30 minutes on the wrong side of the trend, right? So that's just something I want to bring awareness to, man. Let these trades come to you. So in terms of the SPY, what do I think of the overall trend direction now? This is interesting, man. So we have a gap to fill at 377.39. So this is going to be a new key level, and it's funny because that's actually where the best gap, one of the best gap fill levels was at. So right here, $377.91. There's a gap to fill here. It cracked it, 377.39. So 377.39. This is going to be the previous closing price. Let me draw a line right here. So 377.39. So right there, that is going to be the key make it or break it level for the SPY in terms of resistance, right? Now, another key level that I want you to be aware of, we will likely see a bounce. This is going to be a key level, right? So key support level is going to be right here at $370, 371. We're going to call it $370. So here's our key levels right now. $377.39 is your key make it or break it level. Your middle key make it or break it level, we're going to call it $370. And your best level for calls, we're going to call it $365.86. We should see a bounce, look for a gap, close reversal, look for bullish confirmations. Again, trade with confirmations. Trade based off confirmations and reactions with your strategies. Do not blindly enter into a price, a key level, a strategy without confirmation. You have to study the confirmation. You have to study the reaction. Is it forming the bullish or bearish candlesticks at these key levels? Is it forming a floor at this support? Is it starting to uptrend at this support? Or is it forming lower highs? Is it reacting as a resistance? Is it reacting as a roof? So these are our key levels. These are the levels that I want you to focus on heading into this week. $377.39. You can also say $377.91, right? Your middle level is $370.18. Your bottom level, and this is the best level for scalping calls, $365.86. Also, if we see daily candlesticks form, bullish daily candlesticks form at this level, then that's a swing trade for calls if it's a bullish daily candle. So if the candlestick looks like this, it's green, it's bullish, it's a nice trend reversal candlestick, and you see it at this gap fill level, that's confirmation of swing trade calls. Swing trades are not determined right until the market closes. Swing trades are not determined until right before the market closes, right? Because we don't know what the one-day candle is going to look like until the market closes, right? We trade with confirmation. So for those of you asking me about swing trades, it's not determined until the last couple minutes into the close, because that's when the one-day candle finally shapes itself, and that's what we know what it looks like for the confirmation. So I want to bring awareness to that in terms of swing trades. Now, those are your 3 key make it or break it levels, and those are the levels that I'm going to be looking to trade at, right? So if we form resistance at 377.39, then I'll look for puts in that situation. Now, another area for puts, and I want you to write this level down as well, is going to be right here. 300, it's a little tough. Let me see if I can lower the overall time frame here to help. Okay, so another potential level for puts we're going to say is 382 to 380. 382 to we'll say 381, right? So in this zone, this could be a put zone. If you see it react as a resistance, right? So say it spikes back up, previous support reacts as a resistance, look for the crash, just like what occurred right here, where previous support reacted as resistance, previous support reacted as resistance. Quick scalps in and out very, very quickly. So my levels to scalp the SPY heading into this week are going to be this. The top level is going to be 381 to 382. That's the top level. Your second top level is going to be this 378 to 377.39. The third level, in the more bottom middle level, we're going to say is going to be this support at 370. And then once that cracks, it's a bloodbath. But your support at 370, likely see a bounce around there. We have to see. And then this gap fill level. This is like the really look for calls if we see the bullish confirmation at 365.86. So those are my levels. Let's work it back up now. 365.86, 370, 377.39 to 378, and 381 to 382. Those are my key levels where I'm going to be looking to trade the SPY. The higher the level, the better for puts. I need the bearish reaction. The lower the level, the better for calls. I need the bullish reaction. Confirmations, right? Do not blindly enter into trades. Do not blindly enter into key make it or break it levels. These are make it or break it levels. We need to see if it's going to make or break. We need to see the confirmation. We need to see how it reacts. But once we get those candlesticks forming and those reactions, whether it's backside of the move, lower highs, or front side of the move starts bottom uptrend, then we know what to do. Simple as that, guys. Simple as that. Confirmations, right? I mean, you tell me, if there's a gap to fill on the SPY at 389, and if you look at what it's been doing, I mean, this just had a rapid sell-off. It had partial gap close reversals. Would you play puts? The idea would be puts because the overreaction is to the upside. It's been having partial gap close reversals and already crashed. But what would the confirmations look like in a situation like that? Well, this isn't bullish. This is a trend reversal candlestick. This isn't bullish. These are top wicks. This isn't bullish. It's forming lower highs. Look at these lower highs. Look at these lower highs. Look at these lower highs, right? I actually didn't play puts the second time here because I wanted a higher level. I wanted a higher level. It is what it is, man. Respect. I wanted that 390 gap. But one thing that I forgot was that gap actually filled during extended hours. And I don't think I remembered that heading into today. So you really got to remember that. But yeah, that gap did technically fill right here during extended hours trading. That 390 gap did fill. So, I was waiting for something that already filled and already had a reversal. So that's not my mistake. So make sure you're always looking at extended hours. But yeah, if you do want to be a part of Trader Society, that's going to be the first link down below in the description. You can start trading live with us every single day. You get access to the people within Trader Society where you can network with them. A lot of great people within Trader Society. They helped improve my trading on the SPY. They helped improve several members trading within the SPY. You can direct message us as well. You also get access to the video lesson library where you get to learn risk management, position sizing, the unique trading strategies that have created the gap trading strategies, how to compound your account, how to trade options, calls, and puts, how to trade both ways. Risk management, position sizing, psychology, and mindset training is all within the video lesson library. You also get access to the Discord server, to my real-time trade alerts, not for you to blindly follow, but for you to see what it is that I'm doing in real time. And you also get access to the watch list and the stock analysis. And any questions you have, any updates you want me to give, will be given to you within Trader Society if you ask. With that being said, guys, like I said, man, big shout out to members within Trader Society. We're helping each other and we're making each other money, man. Ricky Garcia literally helped me make a very nice return on made calls, and that was a very good start to the day. If it wasn't for him, I would not have been in that trade. So big shout out to him. And that's what we're trying to do. We're trying to create professional traders. We're trying to create the best traders. So we have eyes on the market and we can bring awareness to these opportunities and help each other out along the way. So yeah, if you want to join, it's the first link down below in the description. I will see you guys tomorrow live towards market open.